The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate podcast. I'm your host, Patty Teal. Let me tell you about today's icon. His name is Chris Salerno. He helped lead the real estate team in the Carolinas to produce more than $140 million in annual sales before creating QC Capital, a premier multifamily boutique with investment sourcing, structuring, execution, and asset management. He's going to have a lot of information for us today. Welcome, Chris.
Thank you so much for having me.
Oh, I'm so happy to have you on the show. Especially, I need to learn more about the things that you are doing and how you're helping people to make all this money. So I'm excited about that.
Yes.
Yes. So usually we start with people sharing their journey. How did you get to the point you're at today? You look pretty young, so you're doing very, very well for yourself. So
Thank you.
How did you get to where you are? When did you start?
Yeah, I started 7.5 years ago in the residential industry. As you elaborated a little bit, I was in the residential industry. From there, I became the top broker in Charlotte, grew a company, ended up merging that with the number one company in the Carolinas. They were also fourth in the world. And was able to make them around 46% profitable in about a year and a half. After doing so, I just felt like I hit a ceiling. There's no more room for me to grow. And I started educating myself on the multifamily industry. I have a very old friend that we just reconnected a couple months ago. And we were having a cigar together. And I said, you remember when you told me about that one gentleman who's in multifamily? And I ended up pulling up his PPM and reading through his doc. And for example, if you can see this right here is my documents of our fund that we're about to release. It's around 125 pages. And at that time, his document, I wanted to say was north of 200. And I read through it all. It put me to sleep a couple times, but I read through it all. And that's what really got me into multifamily. I love multifamily as it's a necessity. We all need shelter. It's not going away. We have a huge shortage of multifamily at the moment. And so after educating myself on that, I ended up going ahead and leaving the single family space, residential, to create QC Capital. And then within 3 years, we acquired a little over 200 million, sold off some assets, and we're looking to really scale our company within the next 6 months.
Wow, congratulations. That is absolutely wonderful. Now, are multifamily units especially profitable during an inflationary time as we're in right now?
It's very, very profitable. I mean, we're seeing profits of anywhere from 20 to 40 million on some of these complexes as profits only in a year to 2 years. So we're seeing extremely profitable. We're not seeing it slow down anytime soon due to the market. You know, going back to your old mathematical college days, when we talk about supply and demand, the supply is extremely low and the demand is out of the roof for multifamily housing, and that is drawing up the prices substantially.
Wow. So rents are pretty high right now, so that plays into it too because there's limited supply. Is that correct?
Very much so. And if you look over the past 5 decades, from our research, we've never seen rents actually decline. Well, you may have it in a month, but over year, rents have always been on a steady incline. Same with, pay wages. We've seen that on a steady incline. 50 years ago, minimum wages, probably $5 an hour. Now you're seeing a lot of companies do $15 an hour. So, times have changed and we're only seeing an increase.
Oh, that is so interesting. And so it's a very, very timely. So interesting how you're growing. I know you're in Charlotte, North Carolina, but you've recently expanded out into Texas.
Yeah, we acquired our first asset in Texas in Q1 of this year. We're very excited about that. We actually have just received under contract yesterday another asset in Texas, which is in Houston. So we are breaking into the Texas market and very excited to do so.
how do you decide where you want to go next as far as, purchasing this multifamily property? Is there a lot of analysis that goes into it?
Yeah, yeah, we do a very large deep dive into the properties before we acquire them. And the reason why is because I also put my own money in these deals. So my own personal capital is alongside all of our investors' capital, and we want to make sure that we have that interest aligned. Doing a really deep dive, our main primary focus is the Southeast. We are not opening up any new markets right now at the moment, and Southeast consists of all the way from Texas, Florida, up to North Carolina and Tennessee. And that's, if you just draw a nice little shape there, that's where it is, from North Carolina, Florida, Texas, Tennessee. And if you connect those dots, that's where our main focus is. And the reason being is because a lot of job population is going down there, a lot of job growth. You're seeing companies fluctuate and move everything and move their headquarters to the Southeast. Low cost of living still at the end of the day. And that's what people want. And so we're following that trend, and we feel that trend is going to grow even more. For example, here in Charlotte, a lot of people don't realize that Charlotte's the second biggest financial district in the United States, right after Manhattan. We're home to a lot of financial firms, and we just built and led the nation in office development of over 5 million square foot of office development just last year alone. So we're seeing a lot of growth here in Charlotte, and it's not slowing down. And we're also noticing that throughout the Southeast.
Wow. Well, I didn't know that they were the second biggest financial district, so that's news to me. I knew they were a big city, a big fun
Yep.
city, but that's news. Yeah. So I know, Chris, you work with accredited investors. What makes an investor accredited?
Yeah, so that definition does not come from us. We don't make it up. It comes from the SEC, which is the Securities Exchange Commission, and that's who governs us as a private equity firm throughout the space. And the SEC has made the definition of an accredited investor is an individual who makes $200,000 for the past 2 years and expect to make it this year, and or have a minimum net worth of 1 million. And if you're filing as a couple, as a married couple, that number, instead of 200,000, has to be 300,000 for the past 2 years and expect to make it this year, or a minimum net worth of 1 million. That is the definition of an accredited investor. So that means you would be an accredited investor, and you can now participate in our type of opportunities that we offer. And so that the SEC has made some announcements that number may change and increase. As of right now, that's where the definition stands. But we all know with Uncle Sam, you never know what they'll do when they wake up. So
You never know. You never know. Is it hard for investors to make that leap from, single family homes to the multi-unit investor?
that's a great question. It's only hard if you make it hard.
Okay.
At the end of the day, if you decide to make things harder on yourself, it's going to be very difficult. If you decide to seek the positive and seek out the positive things and really push yourself, you're going to make it easy. But it's all up to you. If you think it's going to be hard, it's going to be hard. If you think it's going to be easy, it's going to be easy.
I like that.
When I say easy, I don't think it's roses, champagne, and chocolate covered strawberries all the time, because it is difficult.
Right.
When I left that one company that I operated, I reconnected with the owner a couple months ago, and he said, "Chris, after you left, I did some research on your industry, and I realized, and I've talked to some people in your industry, only the 1% make it." He says, "Your industry is cutthroat." And I said, "Yes, it's the Hunger Games. That's what it is."
The Hunger Games.
And I love it. I enjoy it.
Mhm.
And he said, "I'm proud of what you created within 3 years, because it is a very difficult business to be in." And I said, "I know." And so, it's how you see the business and how you can handle the stress and pressure. Everyone can handle stress and pressure differently.
Right. So you said 1%?
That's
Are
what he
successful?
said.
Oh, that's
That's
what
what he
he
said.
said.
Yeah, he said about 1%. He said a lot of people fail in this industry because it's extremely difficult to get up, run, and run $1 billion company.
Yeah. So what type of person would you say would be successful? Because 1% is, of course, a very small percentage, and he may be right, he may be wrong, but obviously it's a small percentage. What does it take to succeed?
Yeah, I definitely think, it takes drive, motivation, determination to succeed, willing to do whatever it takes. I've slept in my office plenty of times. A couple weeks ago, I've slept in my office. I enjoy work. I'm the most comfortable behind my desk. I think another thing that what it really takes is that it takes the ability to handle stress and pressure at a very high level. We're dealing with millions and millions of dollars that we could lose. And you have to be able to sleep at night. You have to be able to wake up. You have to be able to deal with a lot of things and a lot of moving parts all at once. And if you can't handle that with that type of pressure, then I always recommend hop on a company, hop on a team that has a very strong CEO and a very strong leader that can handle that type of pressure, because it gets down to the deadline. Some scenarios you have 30 minutes, to wire capital, or you lose $1 million. And then a lot of people can't handle that pressure or stress.
I might be one of them. That sounds kind of scary to me. Anyway, but there are a lot of those entrepreneurial types that just thrive with that kind of pressure. I
love it.
Yeah, yeah. So how do these investors find you, or how do you find them?
Yeah, it's a mixture. We have a very strong social media presence. I have an Instagram, which is Chris_Salerno_. I'm very present on LinkedIn with pouring educational content throughout LinkedIn on the multifamily and alternative investing space. And then our website, which is qccapitalgroup.com. A lot of people find us through Google and social media. We're actually increasing our ad spend right now on Instagram and Facebook, and we're moving over to LinkedIn as an ad spend too. So I think those are some very, very important things that we are doing. And that's how investors are finding us, and we're finding investors. The majority of our investors, I will tell you, are referral based. They come and they're are referral based investors that are referring their friends and family because they are so pleased with our services. They want everyone to be involved.
Well, and that's a testament to you. They must be very happy with you, or they wouldn't be referring you.
Very much so.
Yes, and I know you have a podcast, which is called Mindful Multifamily Show. I love that name. Really nice.
Thank you.
And what is its purpose? Who would benefit by watching or listening to it? Tell me a little bit more about that podcast.
Yeah, so the purpose of the Mindful Multifamily Show is to add educational information to the everyday individual who's looking to invest. When I first got in the space, I didn't know I could have any part of ownership of these larger buildings. And so the show is to educate individuals on investing into real estate, on how they can get started. And with all that, I just wrote the Multifamily Real Estate Investing Booklet. You can find it on Amazon. It's only $6.99. And everything I have accumulated in my knowledge, I put in this booklet, which is around a 60 page booklet, very quick, but it's in detail on how you can get started investing in these larger deals, pay no taxes, depending on how you file your taxes, and start building wealth through large multifamily real estate.
So Chris, would you repeat the name of that again? That sounds very interesting. I think a lot of people will want to get that.
Yeah, it's the Multifamily Real Estate Investing Booklet.
Okay.
It is on Amazon, and I can send you over the link so you can put it in the show notes. But it looks
That
just
would be
like
great.
this.
Would be great. And so I was reading on your website about the 1031 exchange and how
Yes.
investors can use it to their advantage. Can you explain that?
Yeah, so the benefit that we all have right now at the moment, I've heard they're maybe taking it away, so let's take advantage of it as much as possible, is the 1031 exchange. That is the ability to not pay taxes on your profits. So for example, when you go ahead and sell a property, you can either liquidate your profits and liquidate your investment. And that means that it goes directly back to you, and then you would have to pay tax on it, or capital gain tax, depending on how long your capital has been in that investment vehicle. And if you decide to say, hey, I don't want to pay tax, I don't need the money right now, I want to reinvest that into another deal with you, then our investing partners, when we sell a property, say, hey, Chris, let's go ahead and reinvest it. Then it goes into a 1031 and it sits with an intermediary, which they hold the capital. We cannot touch it, or Uncle Sam wants us to pay tax. So we put it with an intermediary who holds the capital. And then we find another deal that we can 1031 that capital in. So we are deferring our taxes. We're not paying tax on that money because of the code that the Uncle Sam, the government, has created with the 1031 exchange, where we can take that money and then place it into that new investment without paying tax. Now, there's multiple different ways. We also do accept 1031s from other investors. We have investing partners that come to us and say, hey, we have a 1031, we have to place capital, and they can 1031 their capital with us in our deal as well. It doesn't just have to be someone who's already participated in an opportunity.
Wow, that's really interesting. Oh, so much to learn. And they can listen to your podcast and learn more, or get the book that you were speaking of. Now, could you explain also what a bridge loan is and when that would be something that an investor would consider?
Yeah, that's a great question. Our book also explains in detail what a bridge loan is, and I'll give you a high-level overview. Right now, we're not seeing that many people go bridge, and we used to go bridge. We no longer go bridge. We go regular agency, and what that means is bridge is a loan that you can get. Normally, it's higher leverage, a little higher interest rate. However, the past year and a half, it was lower interest rates. So that's why you saw a lot of people go bridge, and it covers your CapEx, which means that your CapEx is your renovation budget. What you do is for example, if you have $1 million as a renovation budget, you can go get a 60, 65, 70, 75% bridge loan, which is going to also include your $1 million. So they'll give you a 70% of value. And then they'll also do 100% of your renovation budget. And normally it's a lot more flexible. You have a certain IO period. You do have a higher interest rate. However, you do have to purchase a cap. You don't have to, but lenders require you to. So you basically have to. And it's a rate cap, which means you're paying extra money to make sure that you are capped out at a certain rate. So if interest rates go above there, they actually reimburse you. However, you have a floating rate loan. Very rarely you'll get a fixed rate with a bridge. I would say 98% of the time you're going to get a floating rate, which means your rate floats depending on the market. Why a lot of people are going agency right now is because of the debt market so volatile, and it's so expensive to buy a rate cap that it doesn't make sense to go bridge. I have heard a couple bridge lenders doing fixed. I've heard about that, and that's why I brought it up. However, that's very, very rare, and you have to have very strong relationships, in my opinion, to get that ability to have a fixed bridge.
Oh, thank you for explaining that. Now, is there a picture or an avatar of your average investor? Are they young, old, all ages? Can you
It's a wide range. We have young, we have older, we have CEOs, executives, we have retired individuals, we have military individuals, which hold dear to my heart. We have, just a wide range of individuals, but they all have one thing in common is they want to build wealth through real estate investing.
Right. And obviously you believe, and actually I do too, that building wealth through real estate investing is the best way to build wealth.
If you look at all the billionaires, and I study a lot of billionaires very closely, majority of them do own real estate, and a lot of them do own multifamily units because of the economies of scale and the ability for the appreciation in cash flow that these properties house. Now, keep in mind, it's a necessity. We all need shelter. We need food and shelter. That's what we're going to find in our life, and then we're going to do things beyond that after we find those two things. So a lot of billionaires, a lot of very, very wealthy individuals find it. One thing to note is that your insurance companies, Northwestern Mutual, which we have very good relationships with, Travelers, Geico, Allstate, they all own multifamily real estate.
Wow.
A lot of them beat us out on deals because they're paying cash 50, 60, 70 million for these deals. So they're beating us out on these deals. However, they all own multifamily real estate in their portfolio. And why is that? Because it cash flows and they need to pay out premiums. When something happens, they have to pay out premiums. So they're paying out premiums from the cash flowing real estate they own.
They know what they're doing, don't they?
They do. And one thing to note as well is I dropped out of college at very early after a year and a half. And the reason why is because I realized, and we have very good relationships with the University of Michigan endowment at the moment. I realized that when I was in college that an 18-year-old has to go and get a loan from Uncle Sam, and that loan pays the tuition at the college. Well, as an 18-year-old, that's the only loan, or no matter what age you are, that's the only loan you cannot file for bankruptcy. So you have to, and you're forced to, pay that loan back to Uncle Sam, because if you don't pay after 6 months, then they go into your wages and garnish them, whether you like it or not. So you're forced to pay those student loans back. And now the university has your 40 or 60,000 a semester, that whatever number you're paying, they have that 40 or 60,000. Guess what they're doing with it? They're investing in the real estate. That's what they're doing. They're investing that money. Yeah. And I realized that, and I said, why are they? I said, I'm out. I'm dropping out of college. This is ridiculous. It's the best business there is, because they're guaranteed their money from Uncle Sam, and the students are forced to pay them back. And so after realizing that, that's when I said I am out, and I started educating myself in the real estate industry. And ironically, now we partner with institutions that are endowments from colleges to help them invest in real estate.
That's fascinating. I hope that attitude is changing. I know when my kids were in school, it's like if you didn't go to college, the parents would feel like your child was a failure. They were doomed.
Your kid didn't go to college? Wow.
A couple of them didn't graduate, so they're just doomed. But that's not true.
That is the generation that was prior to myself, is that you have to go to college to be successful. I remember when I was in elementary school, my teacher said, do you want to flip burgers at McDonald's? Because you have to go to college if you don't want to do that.
Yes, that was the attitude. You either did.
And keep this in mind, elementary, middle school, and high school, they brainwash you. The teachers tell you have to go to college to be successful. You have to go to college to be successful. And they keep telling you that. And so elementary school, middle school, and high school, you say, well, I got to go to college to be successful. So how many kids go to college and not know what they want to do? And I'm like, why are you taking out all these loans and you don't even know what you want to do? But in my opinion, they brainwash you through elementary, middle school, and high school, because Uncle Sam wants you to take out these loans. So now they have control over you. The colleges are making money, and they're investing your money that you just paid them.
Wow. Yeah. Well, it takes all kinds of people, and some people need to go to college, and others are more entrepreneurial and can just jump right in like you did.
That is right.
Yeah. So how much, I know it varies widely, but how much would an average multi-unit apartment complex sell for in your area?
In my area, anywhere from 30 to around 80, 85 million. That's the ballpark that we're seeing a lot of transactions are.
Okay. And then what is the minimum that an investor would need to put in? Do you have multiple investors on a property?
Yep. So we have multiple investors for a property. We're releasing a fund next week, which is our QC Capital Fund 2. And our minimum investment is $50,000 into the fund.
Okay. I also love that you study billionaires. I think that's where I went wrong. I didn't study those billionaires.
I study I know all the top 10 billionaires. I've studied them, their businesses, how they've created their businesses, what they're doing. Every time I see when they lose a net worth, I study it to figure out, why they've dropped net worth. And a lot of people, are thinking, well, oh my God, Jeff Bezos or Elon Musk just lost $30 billion. Well, their 30 billion is probably $30 to us or $3 to us.
Right.
But to the average individual, when they see that, they're like, holy cow, I can't imagine that. But they don't realize that it's a different scenario when you're at that level, that it's only $3 or even $30, maybe 300 to them. That's it.
Right. So what is your biggest challenge? You're doing very well, obviously. Is it the stress, or you deal with stress just fine? Do you have any challenges at all?
No, time management is a big challenge. When you are creating a company like this, everyone wants a piece of your time. And, unfortunately, you have to learn how to say no. Because if you say yes all the time, you're going to realize that you've gone the whole week and you haven't accomplished anything. So you definitely have to learn how to say no, and you have to time manage properly. One thing I do is I have a business therapist and a personal therapist. I think that is huge. I talk to them, and I see them on a weekly basis to talk any issues that I'm going through, both personally and in business. And I think that's very, very helpful. It's important to have an open mind, especially when hiring employees and managing people, because there are times I'm wrong. And I'll admit I'm wrong and take one of my employees' ideas and say, yes, you are right. Let's go with it. I think having that open mind, better time management is always key.
Wow, that was very interesting. And do you have a family, children, wife that you shared time with as well?
I am a single father. I have a son who is going to be 3 in December, and he is my world. His name's Cruz Alexander Salerno. I love that little man.
Oh, and the kids take a lot of time, and it's time you can't get back. So that's very, very important.
That is right. That is right.
Yes. Well, Chris, it's been fascinating to talk with you. I loved having you on Icons of Real Estate podcast, and I think you're a true icon. Boy, I can't wait to see where you are in 10, 20 years.
Oh, it's going to be exciting. Fun journey ahead of me.
Absolutely. All right. Bye-bye now.
All right. Bye.